The stock market is a tool that transfers money from the impatient to the patient. In this video, I'm going to be showing you how you can use that patience paired with the RSI in order to make some easy, solid profits. But first, real quick, before we get into the video, if you haven't already and are interested in getting up to 30 free stocks as well as an 8.1 APY on all your uninvested cash, when you sign up using a link down below in the description, be sure to check out the Moomoo link down below in the description because that's what they're offering. And now, without further ado, let's get to the video. Just so you know what to expect from this video, in this video, we are going to be looking at the RSI. Here, I'm going to close this down. I'm going to show you where to find it, how to set it up. If you are unfamiliar with this platform is TradingView. It is absolutely free to use. If you want to get yours to look like mine, be sure to check out this video right here. After you do that, or if you already like the way yours looks, we can get right here to where we set it up. So in order to set it up, once again, this platform is free to use as long as you don't have a bunch of indicators going. So if you just have a pretty blank screen like this, just one chart, it's going to be free. So right here, I'm going to click on indicators. I'm going to type in RSI, and I'm going to click on the one that says relative strength index. All right, and from that, we get something that looks like this. I'm going to come down here. I'm going to double click. I am going to go to style, and I'm going to get rid of this, uncheck this box right here that says RSI based MA. So unchecked. And this is what the RSI is going to look like for you. All right, so just so you know how to read the RSI typically ranges from 0 to 100. Anything below 30 considering to be oversold. Anything above 70 considering to be overbought. Some things I want to say about RSI: just because it's overbought doesn't mean it necessarily needs to go down. And just because it's oversold doesn't mean it necessarily needs to go up. Major thing you're going to want to pay attention to utilizing the RSI is going to be what time frame you're on. So notice right now I'm on a 4H, a 4-hour time frame, which means every one of these candles represents 4 hours of time. So because of that, if I am overbought on the 4-hour, it's going to be a little bit more significant than if I'm overbought on something like the 5-minute. Because you can see, I told you 70 is overbought. We got all the way up here to 90, which is very high on the 5-minute before we kind of sold off. And another thing to notice is if we look here, let me make this a little smaller. But over here, we were overbought. And then we came over here and got closer to being oversold. We got closer to 40. But really all that happened is over here when we were overbought, the stock was trading at about 108. And then it got to 108. And in that whole time, it just kind of traded sideways, and our pullback, it only pulled back to like 106, 107. Whereas if you look at a pullback of a similar amount on a higher time frame, like the 4-hour, here, let's see, let's zoom out just to show you what it would look like. So last time we were overbought. So we were overbought over here at, the stock was trading at 56. Still overbought, pushed up more, and we kind of pulled back. So over here at this peak over here, we're at 63, and we end up, we sell off to 58. So 63 to 58, that's a okay move. That's going from overbought, RSI at about just under 80 down to 56. So it's still closer to the bought side, but it's a move. Come over to the next time it really gets overbought, over at 80, the stock's at 82, and then we recover, or we pull back and we let this kind of level out. When we pull back over to the RSI being neutral, pretty much at 52, we go from 80, 82, 83 up here, down to just this quick little move that takes us to 71. So notice that the moves on the RSI are going to be more significant on a higher time frame. So this is a 4-hour. And then one last time frame, the last one I like to look at it on is going to be the weekly. So if we take a look at Palantir on the weekly chart, you can see that it was overbought on the weekly over here. The RSI was up at 81. It then goes on to cool off over here to about 50, which is neutral level. That's usually where looking to kind of ride it to. So over here, overbought. So overbought was up here at 45. Okay. Riding it to neutral takes you all the way to 17. So right there, there is easy money to be found in this move. If we go back and look historically, every time it was overbought. Here, I'm going to give you some specific values in this video. I don't typically do this with indicators, but with something like the RSI, while 70 is considered overbought, I don't personally start trying to take advantage of the opportunity until it's at 80. So if I see the RSI above 80, like over here, we got the RSI at 85. To me, this is a great level to try to come in and at least ride it back down to 50. It could come back down here, but at least 50. How would one do this? All right, so you can see right here, we kind of topped out over here and we happened to go higher. And once again, we topped out. We're moving over here. We're on the weekly chart. So each one of these candles represents a week. Notice the stock is moving higher. Like the stock's moving higher. We got one high. We got a pullback. We got another high. But this one is lower than the previous one. And it looks like we're kind of losing strength. So from here is when that patience comes into play. So from here, it's like now I kind of look at, hey, what potential areas could this pull back to? First thing I see looking on a weekly chart is I'm kind of intrigued by this $80 level. I see, hey, there's a demand here on the $80 level. There's a lot here. But that being said, pretty much the way that I would utilize this, the RSI is like, hey, I see we're oversold and there is a good chance we're going to sell off. The patience comes into play. If I am trading options, I want to get time on my contract. So since I see this on the weekly time frames, I'm personally looking for probably about 45 to 90 days to get a contract. And then me personally, I'm trying to ride this RSI to at least 50, if not down to the other end, because sometimes stocks like this, it's a pretty strong stock. It may not go all the way down here, but it is going to want to do some sort of leveling it out, and usually that's going to be good profit. So once again, if we kind of look historically here, actually let's look at Tesla to see kind of how that looks. If we look at Tesla on the weekly, every time it kind of got overbought or oversold. So over here, it got the most overbought I've ever seen it on the weekly. If we look at it from here, say we try to write it down to 50. So over here was kind of the move, and it looks like it hit 50 about in here. So just from up there at this level of being overbought, it sold off, like it coming down to 50. That is a 58% move down. Once again, it gets overbought over here, writing that down. So overbought over here overbought's at about 167, coming back to normalization or coming back to 50. That right there is a 23% move down. All right, once again, we ride up and we're overbought up here. Okay, so we're overbought over here. Looking to ride that to 50. That's about in this area right here. When it touches 50, that is a 39% move down. Happens again over here. So over here, we're up at 86. So say we get in on a put and ride it to about 50. It touches 50 about in this range. And that right there is a 36% move. So looking at percentages is pretty wild. And as the stock goes up in value, the first move is $39. This is a $117 move down. This is a $150 move down. And actually looking at Tesla currently, it didn't quite hit 80, but it's pretty close. But if we look at Tesla recently on the weekly chart, Tesla hit kind of its overbought status over here. As of right now, today, it just now kind of hit that, okay, it's kind of close. It's right there at 50. Just this pullback right here, that is a $160 pullback, all based off the RSI on the weekly chart. Now, with that being said, this doesn't just work with the RSI being overbought. It also works with it being oversold. So going on, taking a look at other stocks, the first thing I was really able to even find anything on was the SPY. Typically, if something's oversold, or usually if a solid stock or a company is oversold, it won't be that long because there will be buyers there. But just looking at the SPY every time, I see two occurrences since 2008. And let's kind of look at how they have performed and how they look. All right, so over here, we got oversold. Let's see where we were trading. Looking over here, all right, so we hit oversold status over here at the SPY at 63. And then we kind of leveled out and hit that 50 area over 67. One thing I do want to say that's a little bit different about, being oversold is that usually you can ride it to being overbought. So while riding being oversold to 50 only netted about $5 and a lot of wasted time. If you ride it to oversold, that actually nets you a 48% return, or in this instance, you were able to ride the SPY from 60 to what at the time was crazy new all-time highs over at $92. Now, if we look at the next time it happened, once again, not necessarily going for the 50%, but going back to oversold. Last opportunity that we got was the SPY when it pulled back over to over here when the SPY was at 200, like 203. And the next time that it hit oversold was all the way over here. So right there, from that dip right there, whenever it hit 20 oversold, RSI was 20. It went on a run. It almost doubled. It ran up 84%, $171. And it took about a year, not going to lie, but that's where the patience comes in. All right, so this is on the weekly chart. Some factors to consider when we're looking at the weekly chart. It's gonna take more time, more capital to get stuff like that. All right, if you want to do this on a smaller scale, one I'll often do is the 4-hour chart. Something to keep in mind on the 4-hour chart is that sometimes it takes a while for these things to play out. So the last example we have on the 4-hour chart on the SPY, you can see over here, it doesn't quite hit 80, but it hits 75, which is fair enough. If we go from the first point it hit 75, that was over here, down to when it actually sold off and hit 50, it pretty much gapped down. So your next opportunity to really kind of sell out was right here. So on a 4-hour chart, and that's a 1.5% move, which is over a shorter time, which with options, a $9.17 move, that is plenty of money to be made over the span of, this was from a Wednesday to a Monday. That's about 3 trading days right there. Averaging $3 a day, one kind of foul swoop of a movement. And actually, when it was oversold, it was more than likely down here. So really, that's more like a 3% move, $17, just under $18 move. And it's all from just looking at the RSI, recognizing when it's overbought or oversold. Final notes, final thoughts, final conclusion. For me personally, whenever I am trading using the RSI, there are usually other factors that come into play, but oftentimes If I see this on the 4-hour chart or higher, this is usually pretty convincing for me. It kind of leads me to think, hey, we're about to see something happen. If you found this video to be helpful or learn anything, be sure to smash the like button. If for some reason you're new here and haven't already, be sure to subscribe and hit the bell notification icon so that you don't miss any future content. And last, but certainly not least, thank you so much for watching. Manuel signing off, and I want to change your life.